There is no sign of any kind of a rebound coming in on the fears that an imminent lockdown is looking at us right now in the eyes. We got a big voices lined up for you and analyze the market for you. What should you be doing as an investor? What are the areas you should be nibbling in? Sunil Shah is joining us now on regarding the market. Sunil, of course, has been around for almost 2 decades with reputed companies and, of course, is now running his own firm. Sunil, how are you approaching the fall in the market, which is playing out on the fears of lockdown and also a 15-day lockdown, its impact on Maharashtra and hence the economy overall? What are your thoughts? How should investors approach this correction?
Yeah, Ajay. So, thanks for getting me on the show. Ajay, clearly, we are right now in that phase of the second wave of COVID, and that is very, very apparent. Just that we should look at how things were last year. In fact, in last year when COVID came in, we had a similar situation, but we were completely unprepared. We were not even knowing what to do at that point of time. As we are entering the second wave, we have some kind of a solution in form of vaccine available right now. So yes, 15 days lockdown, Maharashtra, all of that is an event which is going to happen. But if we try to understand the role that vaccine will play, so right now in our country, the number of people who are above 45 years, it's about 26% of our population. So aggregate, it's about 35 crore people who are above the age of 45. And currently, as we are speaking, out of that 35 crore, about 9 crore of them have got vaccinated. So the balance at this run rate is going to get the vaccine in next 3 months. And that apparently seems to be the solution to the problem. So as we get into lockdown, there will be fear in the market. People will get scared that the earnings will again go back for a toss, and market is doing what it is doing right now. But we should also understand that 3 months down the line, when almost the aged population, the so-called 45 plus gets vaccinated, then the fear of corona is going to abate. So it's something that we have to live with. But because the vaccine is in place, maybe there is a solution also available. It's only a question of time that in the next 100 days, we will see 45 plus aged people getting vaccinated. So that's going to comfort the market in that sense. That's something that we should be aware about while nibbling in the markets. The second point is on the liquidity. The way in which, in the first wave, it was humongous liquidity, almost about $7.9 trillion in the world. Right now, as we speak in this calendar year, almost $2.9 trillion of liquidity is still going to be available. So on one side, you will have this vaccine, which will prevent the spread over a period of time. Second side is the liquidity. So all of those factors, if we have a slightly longer horizon of maybe a year plus, all these opportunities which will be there in the market should be looked at, adding up stocks. Because in the first wave, people just saw it come down and go up. Not many of them could participate. But if you are balanced and if you have a long-term thought process, this can be an opportunity which should not be missed out in terms of investing and making returns over a period of time. So those are the thoughts that I have, Ajay, on the COVID situation right now.
Sunil, we are on the cusp of the earnings season, of course kick-started by IT but other sectors. Where do you expect strong earnings display in this earnings season?
Yeah, Ajay, so earnings-wise, I think, if we have to look from slightly longer period, that in the last 3-4 years, there have been a lot of reforms to just cleanse the economy, whether it is GST, demonetization, everything. I think the final nail in coffin came in terms of COVID, wherein weak players just got wiped out. So there are many sectors in which there were incapable players, they are no longer existing. So the quality names, the big guys, the big boys, they are automatically gaining market share. And their balance sheets have already been lean, there was not much of leverage. So if I look at companies, or rather I would look at sector-oriented, there are pockets of tile industries, there are pockets of textile industries, there are pockets of, let's say, the pipes industries, in which there were a large number of unorganized players, and they all got wiped out. So the big boys will show remarkable performance in the fourth quarter as well. So I think ceramics, tiles, maybe even something like garments, the textile industry, there also a lot of cleanup has happened. So the remaining players will show very good numbers and they are on a sustainable growth path. So COVID, which is going to be affecting the first quarter of FY22. But thereafter, again, the strength of the numbers will come through. So I think these are the pockets where, this will be the ones where there was large number of unorganized players or large number of players who had leverage. That is the pocket to watch out for. I think that's the place where we'll have to play the bets and look about investing ideas. So quarter four numbers will be very good for such segments.
We did see last time too, after the lockdown, last March in fact, the next 6-8 months actually turned out to be very good for investors who bought into the correction with a long-term view. If one has to really, form a portfolio over the next 2 weeks, assuming the corrective phase lasts that long, what are the kind of stocks you would recommend or you would look at? What are your favorites?
Yeah, great question. So I'll just touch upon some of the themes that I think can be interesting. One of these themes which we are looking at is the production linked incentive, the PLI scheme which government has introduced, and that is clearly going to be for the ones which are strong players. As I stated earlier, that the strong players will have a great foothold in the business. So the government scheme of PLI is going to earmark about 2 lakh crores as incentives for set of companies which will do very well. And that 2 lakh crores is going to be spread out over a 5-year period. So roughly about 45,000 crores of incentive is going to come from government side. And that 45,000 crores will be a 5% incentive which will be given to companies. And this pocket of companies where the government has segregated, almost about 51,000 crores is going to come in auto ancillary space. About 18,000 crores is going to be for companies which are going to get into mobile manufacturing. Then there are another set of companies which are into white good manufacturing. So these are the sweet spot. And as our country over a period of time progresses from $2.5 trillion to $5 trillion, the spend per capita is going to be more in the electronic goods consumption. So if we can find companies which do a lot of job work for big players, big companies in this category where we are importing those products and now they'll be domestically manufacturing, whether it is LED, whether it is AC, whether it is mobile, all such companies which do a lot of work there will have a great roadmap in the next 3 to 4 years. So I think when the market is having the fear factor, we should look at the things which are available at a good price. I think PLI is one scheme which will be very, very interesting thing to watch out for the next 3 to 4 years. So the companies in the electronics manufacturing would be the ones to watch out for. Second theme which I think, Ajay, would be very important would be the ones of financialization, which is involving companies like CDSL, CAMS, or even AMC business. These are the ones where there is lot of opportunity because there is no amount of capex required for growth. They have a long runway, they have a huge operating leverage. So companies like CDSL, CAMS, or maybe a Nippon AMC can be the ones to really invest into the markets because they have a great growth opportunity in the next 3 to 4 years. I think they are very well placed to capitalize. They have all the levers of growth. They have very high ROEs. They have free cash flow. Their operating margins are very, very healthy. So all these things we should keep in our mind while looking or scouting for opportunities. I think those two themes should be really there, the PLI one and the financialization of savings. Those are the ones I think Ajay, one should look at.
Right. All right, Sunil, we'll let you go on that one. Thanks so much for joining us on the show with your take on how this correction should be approached by for long-term investors. Time for a very short break. On the other side of the break, we'll get you a voice on the macros front, how to really read into the rupee weakness, the current rupee weakness which has started. Yields have also fallen very sharply, and also overall the macro. We'll assess the macro impact of the lockdown which is spoken about, and of course the surge in COVID cases right after this very short break.